Today, we're breaking down IQMM, the ProShares Genius Money Market ETF, a unique ETF designed to deliver money market-style exposure using a fully transparent ETF structure. For investors looking for short-duration Treasury exposure with high liquidity, IQMM is an interesting new entrant in the ultra-short fixed income space. IQMM is designed to operate similarly to a government money market fund, focusing on current income while prioritizing liquidity and capital preservation. What makes this ETF different is that it aims to comply with the strict requirements of the Genius Act, making it one of the first ETFs specifically structured around those regulatory guidelines. The fund actively invests in U.S. Treasury bills, notes, and bonds that mature in 93 days or less, keeping the portfolio extremely short duration and focused on the safest segment of the government bond market. Because the securities mature so quickly, the interest rate risk is very low compared to longer duration bond funds. In addition to the maturity limits, the fund also targets a dollar-weighted average maturity of 60 days or less, which is another characteristic that aligns it closely with traditional money market strategies. The majority of the portfolio is allocated to U.S. Treasuries, which are considered among the safest assets in the world from a credit perspective. However, the fund may also hold cash or cash equivalents for liquidity and defensive purposes, and during unusual market conditions, cash could even make up a significant portion of the portfolio. One important distinction investors should understand is that IQMM does not maintain a stable $1 net asset value, which is what traditional money market mutual funds typically try to do using amortized cost accounting. Instead, this ETF calculates its NAV based on the market value of its holdings, meaning the price can fluctuate slightly during the day like any other ETF. Even though the NAV may move a bit, the underlying strategy is still extremely conservative because the holdings are short-term government securities. As a government money market fund, IQMM must also follow the strict quality, diversification, and liquidity requirements of Rule 2A7, which governs money market funds in the United States. So who might consider IQMM? Investors looking for cash-like exposure within a brokerage account, short-term Treasury income, or a liquid place to park capital between investments may find this ETF useful. It could also appeal to investors who prefer the ETF structure for intraday trading and transparency rather than using a traditional money market mutual fund. That said, it's important to remember that IQMM is not designed to generate high returns or serve as a long-term growth investment. Its primary goal is capital preservation, liquidity, and modest income, making it more comparable to a cash management tool than a traditional bond fund. If you want exposure to the safety of U.S. Treasuries while staying very short on duration, IQMM may be worth keeping on your radar. If you enjoyed this breakdown and want more ETF insights, make sure to like the video, subscribe to the channel, and let me know in the comments which ETF you want covered next.